day, all. Ira Epstein with your financial market wrap-up for this Thursday, the 17th of October, 2019, about 3:18 p.m. Central Daylight Time. So as you can see, what we've got here is a market that these will be the settlement prices, a small up day. We still don't have word on the GM UAW strike. The president announced a truce that has taken place between Syria and Turkey. I guess those are the two that it is. The U.S. won't impose additional sanctions. It's a 5-day truce. Damascus has already said they have no idea what the details are. Why does that not surprise me? Let's just see if they can get through 5 days and then what the real details behind all this are. And that's going to be the interesting question. You can see gold and silver up a bit at the expense of the dollar, which continues to fall. And we're seeing bids coming out in many, many other areas. Now, Britain, the Brexit looks like it's gotten to the point where the EU and Mr. Johnson, not the UK, have agreed. Details are going to be in my nightly report tonight, but there's a Saturday session of Parliament. Now, Mr. Juncker, that represents the EU, has said no, he doesn't want to hear that there's no deal out of Parliament. He doesn't think that they'd go for an extension at the EU. Here's the dilemma. He doesn't speak for the EU. He speaks as the council that leads it, but everybody's got to come together on that. I admire him putting pressure on Parliament to get some deal done. Something's better than nothing after all these years. A bit of an update in the Brent and the WTI, gasoline stable, and natural gas getting a little bit of a bid here. So let's go to the S&P, and as you can see, for the week, you're up 27 points. This is good action. We still have not been able to get a settlement price that is over the previous high two settlement prices. That doesn't mean it won't happen. You finished today at 29.98. You're only 14 points away from it, but we're problems would happen, and the market would probably think things are going wrong, is a settlement back under 29.51, that low close that I just rolled you back to. Barring that, the bias remains up in the market. You do have this overall pattern, you can almost see it, of lower high closes and higher low closes. Pretty clear. When I come over to the daily bar chart, we've been extending this gain. As you can see, the swing line has moved way up. Now, if I come back on this chart, I'll come back to over here. You had an inside day, then you moved higher without taking out that day's low. It's one of the rules that I look at often when I'm setting this. Now what I don't want to see taken out is 29.8475. If that were taken out, you would break this pattern where you've had it of higher lows, higher highs. The market is also trading over the 18-day moving average of closes. That gives it upside bias. So far, we have the swing line up. We have upside bias. And when I go over to the Bollinger Bands, low and top, the resistance comes in right at 30.22.5. So right against those old high closes. Interesting for a Friday, but being up at a high close on a Friday would be quite powerful. As you can see in momentum on the daily chart, you're overbought. So we have an uptrend that hasn't given up, not getting a lot of bear news behind it, able to put on a rally. Can it get to the, let's call it 30.23 area just to round all the numbers off? In the NASDAQ, overbought into that resistance. In fact, you've been there for the past 2 out of 3 sessions, not advancing very much on that. Still close 4.5 higher, but nowhere near embedding either. An overbought market that's fighting a battle against these resistance points that you see pretty clearly right there. There's nothing bearish on that. The question is, are the pros taking money off the table going into the weekend? When you come to the Dow, first, overbought. Second, you have a market that's got uptrends. You had an outside day up today. What you don't want to see taken out is today's low on either Friday or Monday, because that would create what I call a bull trap and could set the market back towards this area for support. Let's assume that's not taken out. The next resistance, 27,259, the upper Bollinger Band. And in the Russell, it's done great work. This market started all the way down here. Then it made its first run into the 18 and the 100-day average of closes, backed away on the first challenge, Came back yesterday. That was 3 days in a row that it was hitting the 18-day average, and 2 out of the 3 days at the 100. The next resistance is the 200. You backed away yesterday, and today you've made your run and able to clear it. Now, if the market can catch any stops tomorrow because the trend is up, the bias is up, and you're over these numbers, then possibly that 1557.5 zone will be the next resistance level, the upper Bollinger Band. Like the other indices, you're very overbought. In the cash VIX, we haven't yet made it to that lower Bollinger Band. Again, I'll stay with what I teach. I think that if you hit that number, you would see the put writers come out trying to see if they can get the market next week on a reaction back into that 118-day average of closes. In the bond market, did the Fed get enough cover out of all this data that's been coming out to really not raise interest rates at the upcoming October meeting, or does it do a rate cut again and then leave December alone? Remember, what we think is happening is we think we have a deal with China for one phase one, I guess is the right grammar, of a trade talk with them. We saw the president make good headway today, by the way, on the situation in Turkey, and therefore I don't think the Senate has to go out and even hold a vote to condemn what he did. Seems to have worked temporarily. They can hold off on that and see at the end of the supposed 5-day truce what takes place. Not saying they won't condemn it, but I'm just saying why. He's just had a winning day. Lower highs, lower lows into the lower Bollinger Band support the combination of the 100-day and that number. But as you see, real interest rates are going higher. Just read a report, could not be in the past 5 minutes, where Goldman is saying maybe it's time for investors to look at some of the riskier junk bond debt. Certain issues look good to them. Interesting, as interest rates are not up at these areas anymore, do you go searching for even better yield? They think that'll be one of the things, and it's out of the report I just read, that investors next year will be considering. Lower highs, lower lows, big support, 129.09, the combination, 100-day, 18-day average of closes. You can't get away from the fact that the trend is down and higher rates are here, even in TLT. You can see how this market hit the lower Bollinger Band, bounced, it's oversold, trend down. You'd have to take out the highs of this week, whatever they are, to get this market to say, uh-oh, too far in these markets to the downside. In the dollar index, it's been quite directional. Yesterday, you paused at the lower Bollinger Band. If that gives ground, I'm sure I would have said, then the next potential support could be the 100-day average. And guess what? That's the number that you seem to be going at. You're also underneath the lower Bollinger Band, so I think the market's getting a little bit ahead of itself. Interesting part will be on the final settlement. Will this number be under a 20 level? These aren't yet the settlement prices. I don't think it will, though. In the eurocurrency, it's the flip-flop of the dollar. It's reaching up. Does it have the momentum here to reach way up to the 112.50 area? It could. I mean, if Brexit gets through, and that's what none of us know come Saturday, if it gets through, that's a big positive. If it doesn't, the markets such as the pound that's had a rally, the eurocurrency, they become subject to retracements very quickly. How do you defend yourself for that on a Sunday night? I don't see how you can. It will just sort of happen on you, and be careful about that. In the British pound, you're up today, as you can see, staying over that upper Bollinger Band area, or trying to. You're 128.95, which is about 10 points over it. It can be either way right on the very close here. In the yen, why do you need to own the yen if everything's going so good? So we had a bounce, but the kind of bounce that you had today's an outside day up. You don't have an embedded reading. Could this be where the market starts bottoming out? All you need to do is not take out today's lows tomorrow, and that'll be the statement that a trade bottom seems to be forming in that market. In Bitcoin, I pointed out yesterday how these Bollinger Bands are narrowing in dramatically. Know where the market fell to today? Challenging that number and stopped itself. As I see it, the trend is still down in the market, but you're in the major support area of that Bollinger Band. In the differential of the Brent versus WTI crude, backing off a little from that $6 area. You can see how the markets today got up to that 18-day average of closes, and that's the battleground. Now, that number is 59.46. You're over it right at the end here at 59.96. The trend is up. That could put the bias of the market up. As long as you don't get back under this 5,800 level, this chart looks pretty good. Next resistance level, 50.86, and if you clear that, wherever the Bollinger Band is at that time, will be another zone. You're fighting the battle in the WTI right at that 18-day average. You're right now at 54.18, just over this 53.94 level. If you close over that, the bias will be up. What you don't want to see in Brent and WTI is taking out this week's lows in both of these charts. That would be really ugly on these charts. We'd look back and say they failed again at the 18-day average of closes. In the gasoline market, while you're pulling back, you're now getting a pattern of lower highs and higher lows. You're in a pause, and the market seems to be ready to fight a battle at the 18 and the 100-day average of closes in an overbought condition. In the nat gas battleground, 3 days in a row, the line in the sand, that 18-day average of closes, if the market can get over this high that it made yesterday, and that high was 256.40. That would put into place a challenge of the 100-day average. Momentum is up. The market, the way it looks like it's closing, the bias is down, and you have a pattern of a higher high, lower low. I don't see anything really happening big there. You know, one of the things I look at this time of the year, especially going into the holiday season, I know you're going to say, what's he talking about? It is October 17th. Before you know it, we're going to be into November. You and I will be talking about Thanksgiving and then Christmas shopping. So what happens in the markets? Well, one of the services I've used for decades, I don't want to say it's 10 years or 20, it's much more. It's literally, I think, since they started in business, the Moore Research Center. And what they use is a database, and they come up with bullish and bearish years and what the market has done in those years. And I'm telling you, it goes back, I know that in order for them to get a signal, they go through a minimum 15 years, and the signal had to have worked at least 13 out of the 15 years, otherwise it's dropped. Now, new ones come on, old ones come off. Is it good enough on its own where it says, oh, on a bear year you're selling here, and a bull year you're buying there? I'm going to go flat out and tell you no. They say, I say, and I don't know anyone that just trades pure seasonals, but they are a tool, and a tool worth looking at. You know, here you are in harvest, for example. Is this the time you buy corn, or is this the time more corn becomes available? Is it the time of the year, just as an example on that, where the yields are coming in not the way that you think? Well, they explain all that, and they give you an idea of bull and bear year, but now let's take it to the bonds. Let's take it to the S&Ps. I can go on and on through them. Foreign currency is interesting. Then they back it up with articles, special articles on spreads, the seasonals, how they're working out at that time. We'd like to give you a free 2-week trial to it. Simply go to our website, sign up for it. We'll make sure that they get it from you. Give us a call if you'd like. We can do it that way as well. Or click up here when you get to our free report area, or what it says, free offers. Click on that area, sign up, and we'll be sure you get everything. I'm Ira Epstein. You have a good day.